Standard disclosure, this video is for education purpose only. We are not SEBI registered advisor. Investment in stock market are subject to market risk. Invest at your own risk. Today, Nifty opened strong at 25,900 levels and then slowly tried to hold 25,800 levels and then crash till 25,600 levels, which is 300 points, and then recovered little bit. So traders, is this smart money distribution or silent accumulation? Stay till the end because I will reveal exact levels, option traps, FIIs flows, and even astro timing. Let us try to understand the levels from price action perspective. Today, Nifty tested a lot of key and important levels. Today was a classic case of fake out. Nifty opened very high, 25,900, which was one of the key resistance as explained yesterday, and then fell sharply till 25,700 level. And then it tried to rebound and test 25,800 level again, which was again mentioned and explained yesterday that if market do not sustain about 25,820 levels, we should avoid going aggressive longs. The same level was tested multiple times, and from there market fell again back to 25,600 levels, which was again one of the key support area which we had marked yesterday, and then recovered till 25,750 level and closed around 25,700 levels. So key levels still remains the same. If market trades below 25,700 levels today, we can see retesting out 25,600 levels, and if this is broken, we can see aggressive selling which might move market to 25,500 and lower levels. On the contrary, if market holds 25,700 level, we can see an attempt to retest 25,820 or 800 levels, and if market sustains about 25,820 levels as well, we can see 25,900 to be tested. If we look at the hourly time frame, for now we are trading in the zone between 25,900 to 25,600 or 25,500 levels. And whenever in the past it is experienced that whenever this kind of situation happens, the market generally breaks out in the direction of the institutions, and unfortunately FIIs are selling at this point of time. Now let us try to read from the technical analysis perspective and bring in some indicators. On the intraday time frame or the 15 minutes time frame at this point of time, if we look at the moving averages, right now market has closed slightly above 20 EMA and 50 EMA, and if it sustains above this, which is a level of close to 25,700 level, we can see upside till 25,800 and maybe potentially touching 25,900 as well. But if it continues to trade below 25,700 level, then the lower levels are possible, so trade accordingly. RSI is neutral. MACD has given the positive crossover for the last 1 hour pullback of market from 25,600 to 25,700. If we look at the daily time frame, market is trading way below 20-day EMA and 50-day EMA unless it crosses and close above 50-day EMA, which is 25,913 level. We do not see any major recovery in the market. On the RSI front, it is again 41, not very positive, not very negative as well, and MACD is in negative divergence and trending low, which is not a positive sign. From the technical perspective, the key levels are resistance is 25,800 and support is 25,600, and breakout level would be 25,900 and breakdown level would be 25,600. Options data. Let's understand what option data is suggesting. VIX is at 11.2, hardly any change today. Put call ratio is 0.7, which is not very positive. And when we look at the change today, there have been a lot of addition of the call writing at the higher levels at 26,000, 25,900, and even at 25,800 levels. When we look at the change, call open interest change 2.06 crore, put open interest change 1.17 crore. That means huge call writing happened today as compared to put writing. And when we look at the position as of now, there is a huge open interest standing at 25,750 levels in calls and huge open interest in puts standing at 25,700 levels. So immediately the resistance would be 25,750 and the support would be 25,700.
break either side can move the market at least 50 to 100 points, either above 25,700 levels or
Now let's
below
understand the
25,700 levels.
activities of institutional players and big monies. FIIs have again sold in cash segment of 1,500 crores. Against that, domestic institutions have bought in cash about 1,200 crores. FIs are still building the short positions in the index. They have sold about 3,900 or 4,000 crores in the Nifty futures, and in index futures they have huge short positions until now. So they are still betting on the short side, not expecting major bounce. Proprietary traders, if you look at their option activity, they have built the short side position in the call options, and in put options they have unwinded their long positions in put options as well. So in decisive move. From the retail traders perspective, they have built longs in the call option, so they are betting on the long side, the retailers. On the put option side, they have huge short side put option open position. They have unwinded few of the short side put option open position. So from put perspective as well, they are on the long side. So in summary, FIIs and pro traders are on the short side, and retailers and DIIs are on the long side. So let's see where the market moves. Big money says we might face sell on rise. Financial astrology. Let's try to attempt to interpret the planetary positions and its potential impact on the financial markets. So first position is Moon, which is in Scorpio, is trining Jupiter, which is a bullish expansion sign and which also suggests the trading on the sentiments. Mercury is in square with Mars, which suggests the potential volatility and big moves. And Saturn is retrograde, which is the cause of a caution and which also suggests restrictive phases. If we compare similar planetary positions in past, which was in Jan 2025, where Nifty gave a positive return of 1.2%, and in Jan 2024, where Nifty again gave the positive return of close to 1%. But again, this is just an interpretation and not the sole predictor of the market. Overall, the financial astrology suggests that we might experience mildly bullish sentiment as compared to the downtrend. Key news which would have a great impact on Indian stock market tomorrow would be one, the trade talks between India and US. Any positive news or negative news from that front would impact positively or negatively to the market. Second, escalating tensions in Iran and the tensions between US and Iran. Any move from the Iran perspective, which would have an impact over the world and over the oil, which can impact negatively to the Indian stock market. And third is anything which would have a negative impact to escalate the FI selling in Indian stock market, whether it would be at USD INR rate or any other news. If you found this detailed analysis helpful, hit that like button. Let's reach to a goal of 100 likes today. Question for you. Do you think 25,600 will hold, or are we heading for 25,000? Comment, hold, or crash below. Don't forget to subscribe Adiyogi Financial Analytics for your daily market roadmap. Trade safe, and I'll see you in the next one. Thank you.